Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad, and this is the daily recap of today's action for Monday, October 26, 2009. Today's session was light on fundamental releases, so coming back from the weekend, traders were looking at equities and other markets for direction. As we see in this look at the euro-dollar pair, we started the week off with another attempt at testing the 1.5050 area, which failed in Asian trading. There was some consolidation during the European trading hours, and then a sharp drop in favor of the greenback during the New York session. The big decline here in this pair came as US stocks started the session higher but reversed around noon New York time, and with the Dow falling about 1% and falling below the 10,000 level, we saw a sharp drop in risk appetite, which helped to boost the greenback. We saw at the end of last week how the 1.5050 level was important resistance, and this test of it early on in the week and the failure to move above it could be an important indication for trading for the rest of this week. Let's zoom this chart back in time a little bit to show a little more price action. And we see that the 1.5050 top follows a pretty strong surge by the euro since October 2nd. We can set up an upward sloping trend line and notice that it was broken in today's trading. The fall today also amounted to about a 1/3 retracement of this entire rally, which here we see as a 38.2% Fibonacci retracement. Today's support now is along this horizontal level near 1.4850, which is about a 200 pip drop from our high today. The pound-dollar pair, which we have now switched to in 1 hour candles, we can see that it did not show the same amount of action as the euro-dollar pair, as the greenback's gains against the pound came at the end of last week following weak UK GDP data. That data showed the economy there shrinking 0.4% in the third quarter, a figure that disappointed forecasts and led to a sell-off of the pound. Today we had a bounce off the 1.6260 area, a level we moved above in October 15th. Let's place a trend line to show that. The break of the 1.6250 area here came as traders increased their speculation that the Bank of England might end its quantitative easing plan or at least pause it, and this was followed by the sell-off when the economy looked like it might not be strong enough to support such actions. In this pair, we also had a break of an upward sloping trend line, as we did in the euro-dollar pair, though that break came in Friday's trading. The euro-pound pair, meanwhile, fell in favor of the pound today, which meant that it was able to pair some of its steep losses following its GDP data from Friday. Today's fall found support at the 61.8% Fibonacci retracement of the swing from this low to our high here. Let's see if this support holds throughout tomorrow's trading. Moving away from the euro and pound pairs, let's take a look at the US dollar Canadian dollar pair, where greenback's strength in the face of risk aversion was very evident. The pair broke to trade around 1.0690 by the end of New York trading, which was a 3-week high for the pair. The Canadian dollar took a step backwards as oil prices fell, stocks were lower, and the Bank of Canada Governor Mark Carney reiterated comments that the nation's currency and its appreciation is a threat to economic recovery. It could be a considered effort by the bank to try and squash any move to parity in the pair, which we had seen only a short while ago. If we look at a little bit more price action, we see that we hit a support here at 1.02 on October 15th, and since then, the greenback has been gaining. We now come up to a level near 1.07, which had acted as support at the end of September and at the start of October, and which now is being tested as resistance. So this is an important level to watch throughout the rest of this week. Following a session that was dominated mainly by equity considerations, tomorrow we have three pretty important releases from the US that could help to determine where Forex markets go. Those releases include housing price data from Standard & Poor's Case-Shiller, the US Richmond Fed Index, and the US Conference Board Consumer Confidence. And that'll wrap up our daily recap for today. Thank you for joining us here at cmsfx.com, and happy trading.